South Korea's benchmark KOSPI has more than doubled from a year ago. In fact, it's been the world's best performing index for 2 straight years. But after such a strong rally, are Korean stocks still a buy? We turn to our economics correspondent Park Jun-han here in the studio. Welcome back, Jun-han.
It's great to be back, Dami.
So, Jun-han, we know the index has at least doubled. Now, it's no exaggeration to say that it's been a chip-led rally, right? Tell us more.
Right, Dami. So basically, South Korea's stock market is experiencing a strong bull run. The primary drivers have been a handful of powerhouse stocks in the semiconductor and automobile sectors. Samsung Electronics and SK hynix have been the undisputed leaders, fueled by explosive demand for AI-related memory chips and the ongoing global AI supercycle. These top 2 megacaps alone have accounted for a disproportionate share of the gains, increasing 285% and 441% year-on-year, respectively. Aside from those two, adding significant momentum was automotive giant Hyundai Motor, which jumped sharply on expectations of advancements in robotics and autonomous driving. A company once considered a classic automaker is now valued as a key tech player in physical AI, partnering with global tech giants like NVIDIA to develop autonomous driving systems and Google DeepMind to advance humanoid robots. As a result, Hyundai Motor also saw a remarkable 197% year-on-year increase. With strong demand for AI chips and earnings that justify stock price growth, domestic and international securities firms have raised near-term targets to as high as 8,000. Nomura Securities has set the most aggressive target, raising the upper band to 8,000 points. That implies a near 27% upside from current levels. Hana Securities is close behind with a target of 7,900, and global investment bank JP Morgan sees the index reaching 7,500. Kiwoom Securities and NH Investment and Securities have both lifted their projections to 7,300.
So it seems like these few stocks are fueling the rise of the index. Now, Jun-han, if not all stocks are going up, isn't it concerning that only a few stocks are disproportionately affecting it?
Right. So Korean market's heavy reliance on few small mega-cap stocks are currently really a concern. But an expert claims that it is mega-cap companies that have the money and technology to dominate the market, which is a universal phenomenon in many countries. Let's take a listen.
There is a reason we keep referring to the U.S. Magnificent Seven. The nature of AI technology means the benefits do not easily spread to smaller companies. Without substantial capital, firms simply cannot compete in this AI game. That is why our top 10 companies by market capitalization are, in effect, our national champions. For now, the priority is survival. Distribution can be discussed after they secure their position.
Well, this dynamic helps explain why valuations continue to expand even as prices rise rapidly. In some cases, earnings growth among market leaders has outpaced share price gains, keeping valuation multiples reasonable or even attractive relative to peers such as other global tech companies. Capitalization is increasingly concentrated in companies that are advancing technology. As more firms ramp up spending on AI, suppliers of essential components such as Samsung and SK hynix stand to benefit. At the same time, companies like Hyundai, which possess both capital and technological capabilities to develop physical AI, are better positioned to attract top talent and accelerate innovation.
Then, Jun-han, what are some expectations or even concerns we should keep in mind when investing in the near future?
Right. First of all, I have to say this, that to all our viewers, this is not a financial advice. Stock investments carry inherent volatility, and viewers should make decisions based on their own judgment. For more about wise ways to invest, let's take a listen to an analyst I spoke to.
The biggest concern in the short term is that the market has risen quite sharply, although concerns in the U.S. about an AI bubble or broader disruption have somewhat eased. If such narratives continue to resurface, they could inevitably weigh on stock prices.
Both analysts I spoke with while preparing this report expressed optimism about the future of the domestic stock market. However, they also cautioned that stocks can move in either direction and volatility-driven corrections could occur at any time.
Of course. So, Jun-han, thanks for coming in tonight. We appreciate it.
Thank you so much, Dami.